FedEx reported mixed fiscal third quarter results before the bell on Wednesday. The company beat on earnings, missed on revenue, and narrowed its full year profit forecast. I'm joined by Christine Short, Senior Vice President of Media at Estimize. So Christine, overall, how do you believe the company performed during what was a strong holiday shipping season?
Overall it was good. This is their peak season, so we expect them to do very well. They reported $2.01 a share, which is actually much higher than we were expecting at Estimize. We were looking for $1.92 a share, and the street was only looking for $1.89. So FedEx was able to beat both Estimize and the street. That represented 63% growth year over year. So this is their fourth consecutive quarter of double-digit earnings growth. All as well as on the earnings front, as you said. But when you look at the top line growth, they were lagging a bit. They reported $11.7 billion. We were looking for something closer to 11.9, which is what the street was also expecting. So this just continues that trend we've been seeing all season, and really for the last couple of quarters, companies really able to beat on the bottom line, but on the top line they haven't been doing as well. And one of the things they mentioned was lower fuel surcharges, as well as the stronger dollar, of course, we've known has been an issue for a while. And it's interesting because over the summer, as fuel started to drop and as consumers started to shop more as a result, and e-commerce has really been heating up, everyone said, well, the transport stocks are really going to do well. But what we forget is they do charge. So now they're not able to charge as much of a surcharge for fuel because they base it on the adjusted gallon of gas prices. So year over year, they're losing revenue there, and of course, unfavorable currency mix.
Right, the company did cite unfavorable currency exchange rates, and you mentioned the stronger dollar. So how do you think it will be impacted going forward from that?
Yeah, they suggested that, last quarter and then again this quarter, and of course they downgraded guidance going forward based on the fact that, the stronger dollar really is having an impact specifically on their FedEx Express business. So that's the planes that are shipping things overseas. They saw volume increase 4%, but they saw revenue per package decrease by 4%. So sort of offsetting there both on volume and base yield growth. However, if you look at some of their other services, FedEx Express here in the U.S. didn't do well also. They were down 2%. They again blamed fuel surcharges, but FedEx Ground was really their bright spot in the entire report. They were up 3%, and they said, they had higher package rates, favorable service mix, meaning people were trading up to higher end services, as well as this addition of dimensional weight pricing, which has been a big impact on all transport stocks.
Right, the company now extended its dimensional weight pricing to all ground shipments now. So how do you expect that to impact not just the company, but all of the transports going forward? This is part of a larger trend.
Right. This was just introduced in January. So previously, you did have dimensional weight pricing for packages that were 3 cubic feet or more. This is really just a price increase. So now instead of just paying for weight, you're also paying on the dimensions of the box that you're shipping in. I think it's a win-win for all transport stocks. On the one hand, if shippers do decide to adapt and they right-size their packages, well, now FedEx can fit more packages in each truck, and they're saving on that. If they decide not to and use bigger boxes, well, they're going to pay for it. So either way, there's no way FedEx is losing from this. And in fact, there's rumors that shipping costs could increase 5 to 25% because of this dimensional weight pricing.
Okay, thank you so much. Christine Short, Senior Vice President at Estimize.
Thank you.
And I'm Brittany Humar for The Street.